Before you scroll, let me tell you something most people learn too late. When market crash, money doesn't just disappear from screens. It disappears from jobs, homes, savings and future plans. You don't need to be an investor for an market crash to hurt you. If you earn money, save money or spend money, this story is about you. Stay till the end because they explain how the world really works during a crash. What a global market crash really means. Most people think a crash means stock prices fall, new channels panic, charts turn red. But a global market crash is a much deeper. It means trust breaks, confidence collapse, fear becomes contagious. Markets are not just numbers, they are expectations about the future. When investors suddenly believe tomorrow will be worse than today, they stop investing, stop leading, and start protecting themselves. A crash is not about money shortage, it's about trust shortage. Why the world is connected? Today's world economy is like one giant system. Money moves across countries in seconds. Companies operate in multiple nations, banks lend globally. Investors don't think in borders. So when one big market crashes, investors ask only one question. Where is my money safest right now? They they pull money out of smallest economies, risk markets, developing countries, not because those countries failed, but because fear demands safety. This is why a problem in one place creates pain everywhere. What happens first during a crash? The first reaction are always the same. Stock markets fall sharply. Investors sell risky assets. Cash becomes king. Volatility explodes. But behind the scenes, something more dangerous starts. Companies delay expansion. Hiring freezes begin. Projects get cancelled. The economy doesn't stop suddenly, it slowly, quietly. Important lines. Crashes don't break economies overnight, they slowly suffocate them. Currencies and inflation. When global investors panic, they rush towards strong currencies, stable economies. This causes weaker currencies to fall, import costs to rise, inflation to increase. So even if you never invested, fuel become expensive, food prices rise, daily expenses increases. This is why people say everything feels costlier after a crash because your money buys less. Banks and credit freeze. Banks are the heart of the economy. During crashes, banks become defensive, loans become harder, interest rates rise, credit dries up. Why? Because banks are defaults. When banks stop leading, businesses stop growing, startups shut down, jobs disappear. Most job losses don't happen during the crash, they happen after it. Stock market versus real life. Market react instantly. People feel the impact slowly. Stock charts may recover in months, but salaries remain low. Employment takes year. Confidence takes longest. This is why people feel confused. Markets are up, but life feels harder. Because markets recover first, people recover last. Why developing countries suffer more? Developing economies depend on foreign investment, exports, external funding. During global crashes, foreign money leaves first, currencies weaken faster, debt becomes expensive, government have fewer tools, limited reserves, higher inflation risk, political pressure. So the same crash hurt them more deeply. Crashes don't treat all countries equally. The role of the fear and media. Fear spreads faster than facts. Headlines amplify panic. Social media multiplies fear. Rumors move markets. People don't sell because logic says so. They sell because others are selling. Markets become emotional machines. The biggest danger during a crash is not a loss, it's panic a decision. Who survived and who lost? History shows one clear pattern. People who survive crashes stay calm, keep cash, think long term, avoid emotional moves. People who lost panic sell, follow noise, chase recovery, overact. Crashes don't destroy everyone, they rearrange wealth. Every market crash feels like the end of the world. Until it becomes history, the real question is not will market crash again. They always do. The real question is will you understand it next time or will you panic again? If this gave you clarity, subscribe for real explanations. Share this because panic is expensive.